Family Home Funds is an agency of federal government under the Ministry of Finance. We started business operation in 2017, and over the years, we have basically 4 major funds. Under those funds, we have the Affordable Housing Fund, the Rental Housing Fund, Land and Infrastructure Fund, and we have a Help to Own Fund. The basic essence and mission of establishment of the organization is to establish an innovative product on affordable home ownership across the country and creation of jobs. So this gives a snapshot of our achievement over the 5-year period. Within the 5 years, we have 58 project sites across 15 countries and 15 states in the country. We have financed 16,000 homes till date, and through financing the 16,000 homes, we have created 85,000 direct and indirect jobs through the housing value chain. Also, we have over 21,000 strong pipeline of homes progressing at different levels. So, the current mortgage landscape in Nigeria. When we talk about mortgage in Nigeria, what comes to mind is availability of the product, or probably not usual product, a financial product that every Nigerian is accustomed to having access to. And these are the major challenges we have that are affecting the mortgage landscape in Nigeria. We have the mortgage interest rates. If any commercial bank today and you want to access mortgage, the best interest rate you can get today is 26% per annum. I don't know what income bracket can access that today. The tenor. The mortgage lenders usually give you a minimum of 5 years tenor to a 10 years tenor. Then, of course, due to all this, yes, the required equity down payment is usually 20 to 30%. And all this cumulatively, the statistics shows that we have less than 5% of Nigerians accessing mortgage in the country. So, first-time homeowners in Nigeria have challenges. And why I said first-time homeowners, we have 2 types of mortgage clients. We have those accessing mortgage for investment purpose, and we have those accessing mortgage for home ownership. So my emphasis on first-time home, when I'm talking about those that want to have a roof over their head and they are not able to pay a full or outright purchase of the property. So they have these challenges. The first is limited access to mortgage financing. I can tell you over time, if you go into any bank, you want to access mortgage, the first thing that scares you is the volume of documentations you have to fill. Then the terms and conditions that are not too favorable for you. Then at the end of the day, you're not qualified after doing all the documentations. The second issue is inadequate supply of affordable housing. I should say maybe inadequate supply of low-income housing, because affordability is relative. So you want, as low and middle-income earner, you want to buy a property. With the current economic situation in the country, we can imagine what a 2-bedroom apartment would cost, or a 3-bedroom townhouse will be going for. It's really not affordable. The prices are way too above what an average Nigerian can afford. Then, of course, we all know the bureaucratic and regulatory orders, the challenges here and there, especially in terms of land titling and all that. Then, our economic instability, inflation. Today, I know that a lot of developers seated here. I can imagine what you're facing today. The prices is here. Tomorrow, it's on the other side. Then, consumer awareness. So, a lot of people don't have adequate knowledge about financial education. Because if you do, you know what the insurance fees you're paying on your property. You will be able to ask your mortgage provider the interest rate calculation. You want to know what are your mortgage repayment rates and all that. So a lot of Nigerians don't have this adequate literacy in terms of mortgage product. These challenges have always been there, and we can't keep talking about them. We can't continue talking all the time. So therefore today, this afternoon, I'm here to tell you that there's an innovative product that seeks to address some of these challenges. It might not address all, but there's a starting point. It addresses some of these challenges, and I'm talking about the Help to Own Fund or Family Owned Funds. What this fund seeks to do is, first, we want to stimulate the provision of affordable mortgages across the country. We also want to deepen the financial system, linking the primary and the secondary market, especially have the mortgage contributing largely to the GDP of the country. Then also, in the housing value chain, we all know that if the housing value chain is active, there will be job creation, because the value chain had so much economic significance to the country. Of course, through this, the program is going to support skill acquisition and apprentice program for the youth in the country. So the Help to Own mortgage product. This is the funding mechanism of the product. The product seeks to have the end borrower or the would-be homeowner pay a minimum down payment of 10%, while family-owned funds and partnered mortgage lenders co-finance the outstanding 90% cost of the property in the ratio of 40% to 50%. So the mortgage tenure is meant to have a maximum tenure of 20 years, and through the co-financing mechanism, family-owned funds fund is going to be diluting the PML's rate, which is quite high at this time. So we're kind of indirectly subsidizing the rate on the PML fund, and we're going to have a blended rate for the mortgage uptake. The PML on the other side, please can you go back? The PML on the other side, the 50% coming in, because we all understand the fact that there's lack of access to long-term funds for most financial institutions, which has been a challenge. So the PML is expected to refinance the 50% contribution through the NMRC or have access to domestic capital market bonds. And that way, I talked about the linkage earlier. So that's the linkage we're talking. We need to unlock funds, long-term funds that are meant for mortgages and improve the housing sector. And we can only do that if we're able to have a healthy portfolio of risk assets that can be securitized in the capital market. So the family-owned funds Help to Own is enabling the primary mortgage lenders to unlock long-term funds in the capital market. Then with this arrangement, we hope to finance or have increased mortgages of about 15,000 mortgages. This is the pilot phase of the project. And we hope that when we're done with the pilot phase, we move to the subsequent phase and look at different market niche to focus on. So how do you assess this? It's very simple. We're partnering with primary mortgage lenders across the country. The beginning of the mortgage application and the end of the application or the closure starts and ends with the mortgage lender. All you have to do is identify a property of interest with good title. You approach any of our partnered mortgage lenders. The mortgage lender underwrites the credit or the mortgage using the NMRC underwriting standard. And what we're using the NMRC underwriting standard is to enable you, the PML, refinance the 50% contribution coming from their hand. And from there, the PML, of course, disburses the loan. The title serves as the collateral, and the home buyer gets key to his house. The partner mortgage lender, of course, will be responsible to ensure perfection of the title. So the features of the mortgage is 20 years of maximum tenure. The interest rate is affordable, a blended rate with the mortgage lender. So while I'm not giving you a particular rate now, we have a lot of primary mortgage lenders. And this is a product, it's a competitive product in the market. So if you want more information, you can visit our stand. We have some brochures on our stand. You can get details of all our primary mortgage lenders. They all have different rates on the 50% part of their funding. So the blended rates, the banks will advise you. So you can now compare whichever one works best for you. Of course, efficient processing turnaround time, and of course, simulation of adequate supply of houses. So why are we doing this? Why is the government doing this? What is the objective? What is our target of doing this? It's about impact. Part of the objective of Family Home Fund is impact. We want to create impact in the country. We've been creating impact, and this is an innovative way or innovative opportunity of creating more impact. So our target is this: the first phase, the pilot phase of this fund. What we'll hope to achieve is that a cumulative portfolio of about $212 million will have been created in mortgage risk assets. That's the target. And we're also targeting that 15,000 household mortgages will have been financed at the end of this pilot phase. 39,000 direct and indirect jobs, with the assumption that for each household we finance or home being financed, we have created a minimum of 2.5 jobs on this. So we also want to encourage our women to own homes, and we're hoping that out of this figure of 15,000 households to be financed, we want women-owned houses to be 20% of those houses. So we're encouraging the women to come out there and own assets and own homes. Then we're hoping to have more than 20 active mortgage lenders. So please, can you go back? So we are targeting to have a good geographic spread across the country. The Help to Home Mortgage Fund is not tied to houses financed by family home funds. It is available to all developers, all properties across the country, in as much as the titles are well-registered title, because we're going to be perfecting the title. The mortgage lenders will perfect the title in order for them to be able to securitize these assets. So properties across the country that have well-titled documents are welcome to access this fund. Okay, the operational model of this fund is very easy and simple. I know we have most of our stakeholders seated in this room today. One of our key partners in this fund is the African Development Bank. Then we have the Nigerian Mortgage Refinancing Company to refinance the other components from the PML. Then, of course, our primary mortgage lenders, commercial and primary mortgage banks in Nigeria. Then we have the real sector, real estate developers, who are the suppliers. And I believe quite a lot of you are in this room. Then, of course, we have our regulator, the Central Bank of Nigeria. Then we have our aggregator under the Mortgage Bankers Association of Nigeria. And of course, the various state and land registry, because we also need them as major stakeholder to enable perfection of title and easy administration of land titles. The major activities here is we're looking at affordable mortgage finance to create affordability for the financing of mortgage in the country. We want to build several products, availability of different products. When you enter a bank, there should be opportunity for you to choose between various product offerings from the bank. So this is an opportunity for that. We're also part of our activity improving capacity development of partnered mortgage lenders. Because part of the initiative of this fund is that there has to be a very strong ESG principle behind the mortgages we're creating.
Madam,
so,
sorry. You need to summary.
So, I'm rounding up already. Then, of course, the target segment we're focusing on is low, middle-income households, first-time homeowner, and women or widow-led households, and, of course, economically active youth. So, my stakeholders here, primary mortgage lenders, why you should be part of this fund. First, you're going to have improved earnings, opportunity for long-term capital, LD mortgage portfolio for you, and of course, there will be strengthening of the housing sector. Then for the private developers here seated, this is an opportunity for you to have a guaranteed exit. When you build houses, you know there are exits for you. You can borrow funds. You know you can unlock your funds and repay wherever you borrow when there is a guaranteed exit. Access to innovative funding. Then home buyers that are present here, accessible mortgage offering, affordability, and long-term repayment tenure. So the future outlook, we all know the landscape of the Nigerian economy. We know our urbanization. We have a very active growing population, so there's demand for housing and there will be increasing demand. So it's a business for you, developers. It's a business for you, the PML. There's technological advancement in construction. The mortgage market will keep expanding. And of course, there will be more focus on sustainable development.
This is Housing TV Africa on YouTube and click on the subscribe button. Subscribe to Housing TV Africa to stay updated on latest happenings in Nigeria's housing sector. Follow our social media pages, like and share our posts. On Facebook, Housing TV Africa. On Twitter, Housing TV Africa. Instagram, Housing TV Africa.